So how significant is this development? Well, to answer that, from Hong Kong, we're joined by Yonghao. He's the Regional Chief Investment Officer at Northern APAC of UBS Wealth Management. And from Chicago, we've got Jonathan Brodsky, Managing Director at Advisor Research. And welcome, gentlemen. Good to have you on the show. Yonghao, you day $1 billion share sound only like 7% of this daily quota. Why is Shanghai getting so much more interest from Hong Kong investors around?
I think it's to exist. I think if the lot already has a position in the Hong Kong, already has some access to Hong Kong market. But to the northbound, let's say the overseas investor to access Chinese market, in a way the access are still very limited. And that's why we see the stronger interest to the northbound, but not the weaker interest in the southbound investment.
And Jonathan, I'm going to bring you in from Chicago. Do you expect that to change at any time? Do you expect to see a reversal in that trend?
I think the northbound trades will continue to be strong. You know, we're foreign investors located in Chicago, and we've been waiting eagerly for the opportunity to trade in Shanghai. So the Connect is a big development for us. I think a lot of Chinese mainland investors have had the opportunity, if they're established investors, to trade in Hong Kong one way or the other. But for us, without a license, this really is a major development, which gives us an opportunity that we have prior today.
Yonghao, I want to ask you, how does it help bolster Shanghai as an like this one of those stocks?
Certainly, it's a country's model to push Shanghai become one international. That's the vision. This open more mutual access, help Shanghai to win. But let's you pair the let's say Chicago show just started and self-send was not you are true at the definition. It's the use not the emotional and also into other and force. So this mutual help that direction but long go big international session.
Certainly, one of them trading options because Jonathan, if my large renewables have been so that it's able to the U.S. change and.
I think the trading opportunity as the industry mentioned very weight and the global size to those are us to overcome. As the market liberalizes, we would expect China to carry a higher weight in the indexes, thereby bringing in more capital.
What are some of the cons of this? Are there any losers in this deal? Jonathan.
I think the potential losers here are some of the large investment banks, which have made quite a bit of money off of the QFII trading situation, costs associated with that. The liberalization of these markets is good for retail investors. It's good for institutional investors. I think the potential loser here really is some banks that made high levels of fees trading off the old regime.
Well, Japan Exchange Group has expressed interest in joining the Hong Kong-Shanghai Connect. Yonghao, do you see other exchanges trying to get in on this party as well?
Oh, certainly. I think China have clearly there are other things on the map in the pipeline. I think Shenzhen might join the market mutual access. And I'm sure this kind of through train will extend to the other stock exchange. I wouldn't name particular one, but I think China is gradually into the world in the financial sense or economic sense. I could say that China's into the global economy brought investment opportunities to one. I think probably from the part in some business maker see in a way it's going to reduce, but then the China's integration in the global economic environment, particularly financial world, will increase the opportunity for the best. Yes.
And Yonghao, I want to stay with you. What the role that this could play for bolstering renminbi and the global stage?
Yeah, I think renminbi, again, this is probably one of the reasons why Chinese financial market hasn't fully integrated into the world financial market, because currency is not fully convertible. I think China is moving towards that direction. Hopefully, renminbi will gradually become a convertible currency. Right now, China is still concerned if you allow the renminbi to be fully convertible, basically you open your monetary policy. So that's why China was only slowly making progress in terms of pushing the offshore renminbi center and so on and so forth. and you still can see that the progress is very incremental or gradual. Because even, let's say, with this kind of market neutral access, you might see Chinese citizen can invest in the Hong Kong listed stock. Sounds like the capital has been flowing out of China, but effectively when they liquidate this kind of position, the money will back to the China in the renminbi term. So in a way, this kind of capital outflow has been is kind of in a very controlled fashion, is not fully a flow yet.
All right, we're going to have to leave it there. We're out of time. Thank you so much. Yonghao Pu, Regional Chief Investment Officer of Northern APAC at UBS Wealth Management, and Jonathan Brodsky, Managing Director at Advisory Research.